Let's go through all of the investing ideas, theses that were published in June of 2022. So we start with those that are in the heartbeat sheet. So let's find the items published in June. And here is the first one. This is Belgium moving average megatest. And this was on the 5th of June. Let's find here the 5th of June. It is here. Belgium -4 in favor of the bears. You had 200 weekly moving average resistance. And technicals and seasonality and also relative performance were the weakest components. So the video was published on the 5th of June. So let's find here the 5th of June. Let's zoom in a bit here. So this here was the last candlestick before I did my analysis, and in this case you had this major attempted breakout above the 200 weekly moving average, but then we closed lower. So from that point we went down, went up 20-ish%, but then we did have a massive pullback, -17.50. So definitively, the 200-week moving average, it became a solid resistance level. And if we look at what happened later on as well, resistance, and the bears were really making sure that the bulls didn't rally, well, had any successful rallies. So in this case, did this thesis play out? Did the 200 weekly moving average offer resistance? Definitively. So this one is a win. Next on the list is on the 18th of June, China ETF outperforming American stocks, exclamation mark. So here is the 18th of June. So you had a 2.3 in favor of the bulls, 20 weekly moving average and 100 daily moving average resistance. So this is one of those situations where the technicals were actually weak, but seasonality and fundamentals were, strong enough to sort of outweigh it. You had one bull here on relative performance, but the big score here is definitively seasonality. So here is China FXI. Yeah, so let's find here the 18th of June. So it is, this is the week, like that. So here is, so this is the resistance we had when I made the video. And you did see that in terms of the seasonality, you did actually get a strong rally, but it was a very temporary rally above that resistance level. And you can see that ever since that, you can see like that. So the 20 weekly moving average has definitively continued to be a problem here for the bulls. No doubt about that. Looking at the daily data points, so let us draw that in. And let's find here the 18. So the 100 daily moving average was resistance. So here is the 16th of June, and here is the first following day. And that here was the 21st. We pull back a bit, and then we have this breakout above it. But that, blue 100-day moving average, it did continue to be a bit of a problem later on. So it obviously still is a very much important moving average. Unfortunately, it is a resistance level. And you can see here that the China ETF has gone, lower since. So in this case, it's a bit messy because there was a conflict between seasonality, fundamentals, and technicals. We did see a breakout. So in that sense, the seasonality played itself out. Then again, these resistance levels came back to haunt the bulls. So this one is messy. It's just a very messy one. But the 2.3 score, it was a bit predictive of a rally, but this one was just very messy. Sometimes the market is messy. That is just the thing. It's nice to have these clean setups that are like primarily bullish or primarily bearish, but sometimes you will have those periods in the market where different signals conflict. And those are also the periods where it can be choppy. And if you lose, what we saw on the FXI there is that it was very choppy. So both bulls and bears could easily get into trouble if they didn't move quick enough. Next on the list is, so let's find June. Yes, it's here. This is the put right ETF. So it holds S&P 500 ETF and also is selling puts. So it's here on the 26th of June, 2022, 5.3. So very, very high bullish score. 100 weekly moving average support. The strongest score here was on the seasonality at 7. That is very high. Relative performance was also pretty decent. So let's find here the 26th of June. So it was published on the 28th. Okay, so in this case, so the 20th of June was the last week before I did the analysis. And from that close, we did go up 4%, but it was all given back, unfortunately. But as far as getting a bounce from that 100-week moving average, it definitively played itself out. You had like 1, 2, 3, 4. You had 8 weeks of us basically just going up. So this was a very good, strong rally. Let's quickly look here at the daily data points. Yeah, it's pretty obvious to me, and I think it's very obvious to you too, that this blue 100-day moving average, it's extremely shortable, just ridiculously easy to short. The bears have done that very successfully, and yeah, that is where that rally failed. It went from started in the 17th-ish of June and rallied all the way up here into early August. But then like 1, 2, 3, 4, 5, 6, 7, 8, almost approaching like 10 times, we tried to break out above it and then failed. So there was a very clear signal to get out of this position. But yeah, is this a winner or a loser? I think we could call this one a winner. It was definitively temporary. The good thing here is that when this one was about to turn into a loser, you got very clear signals like many times after each other. Very solid resistance. So definitively watch out for the 100-day moving average when it is resistance going forward. Given how important the 100-day was, it is also very likely that it's going to become a solid support level if we were to get above it. Okay, next on the list is in the natural resources space. That is the UNG. I will look at the futures, the NG. That is because these commodities ETFs and ETNs, they can be there can be major tracking errors. But yeah, the question is time to short it ? If we go here to the laboratory, I wrote overbought RSI and PPO. The highest score here was -6 here on the technicals in favor of the bears, and also the time cycles were bearish. So yeah, -3.3. So let's here find the 11th of June, like that. Where is the 11th of June? Okay, so here is the 13th of June. So this here, right here, is the last week before, well, it was the last candlestick when I did the analysis. And boom, we do go down almost 40%. We then find support here at this green 50-week moving average, and from that you did get a pretty strong rally. You can see here that the green 50-week has been just an absolutely huge deal and extremely viable back here. So it wasn't like a mega shock that it would work. We've now seen another strong rally, a huge rally, but now it's pulling back. So let's look at the RSI and the PPOs. Yeah, so so this here is the RSI and PPO we had when I made the analysis. Also the MACD was just obscene, ridiculous, really. I mean, if you look at the most recent rally and this pullback here, you do see that we actually failed at a lower level. So there is a bit of more weakness here in the momentum. So that is definitively something to have on our radar, because when there is a change in when the overbought fail level goes down, meaning that is a sign that there's more weakness among the bulls. So that's potentially interesting. Very informative of future trading. But yeah, did this thesis work out? Was this a time to short it? Yeah, I think it was pretty good timing. So I will call this one a winner. So definitively when natural gas is very overbought, RSI and PPO, it can be very shortable, for sure. Next on the list in June. So the reason why I look at those in June is because I do want at least 2 months to transpire between when I publish a thesis and when I review it later on, because then the market has time to react to it. I think these were all under Hotbit. Okay, so let's go down the list. Here is June. The Great British Pound versus the Russian Ruble. So is this the bottom, question mark? Yeah, so let's find these two. So here it is. 3.0 in favor of the bulls. So you had an inverse head and shoulders and 100, well, 10 DMA support. Okay, 10 DMA. The highest score here was on seasonality of 5. And you also had long-term horizontal support. So let's find here the 5th of June. So the 5th of June, it is, yeah, so it's this week here. So here was the last day and we go down. So in this case, you definitively did not get that rally. And you can see here that during this sell-off, we broke down below all of the support levels that could have worked. So this, yeah, the British pound has definitively gotten pounded. So I talked about the 10 daily moving average. So let's find here like that. So when I made the video, you can see here that the 10-day moving average, it had been a pretty strong support level for some time. The problem is that right above us in purple is the 20-day moving average. And the 20-day moving average had gone from support to becoming a resistance level. And the 20-day moving average has been a major issue for the bulls later on as well. So, but here you can see the 20-day becomes support. So definitively these moving averages, they matter. But yeah, in this case, did horizontal support and inverse head and shoulders and 10 DMA help the bulls? Not enough. We went lower. So in this case, the other team, they definitively had the big score. So the bottom was not in for the British pound. And next on the list is New Zealand dollar slash the US dollar on the 18th of June. Let's find the 18th of June here. Deep Forex analysis, 2.3, so you had horizontal support. The highest scores were 3 on technicals and seasonality. That's from a maximum of 9, so not really high scores. So the scores here are lukewarm. So on the 18th of June, we had horizontal support. Yeah, so it's there, the 13th, and here's the 20th. So let's measure like that. So here is the 13th of June, and here is the following week. We go up a tiny bit, then we go down, and then we rally, and then we go down. So let's go here and look at, we might as well just look at the weeklies to see what happened. And draw in that horizontal support, which now is resistance. So here is the handy drawing tool. So you see here was support, here was support, and you also had these support levels back here, these support levels. Because of support not holding, these are now resistance levels. So if you look here at this blackish line, you see that it goes below those potential support levels. So technically speaking, this is a very bad situation here for the New Zealand dollar. Looking at RSI, we are at, and also the PPOs, we are at levels that could form lows. Also here on the dailies, but there's no doubt about it that the bears have made a very, very strong move, and this did tremendous damage to the technicals. So in this case, did horizontal support work? No, it did not work. The seasonality, The bullish seasonality was simply not enough. We did see that there was a little bit of a strong, like, last gasp rally later on, but it wasn't enough. It just was not enough. In order for a low to form, you need more buyers than sellers. In order for a high to form, you need more sellers than buyers, and in this case, yeah. But this is a broader narrative. The US dollar has been a lot stronger than people expected, and that is a liability. Part of the social contract of having a reserve currency is that you are not supposed to ruin, wreck, the economies of other countries. So there are issues definitively with a too strong dollar. Next on the list here is Litecoin / US dollar, and now we are in the crypto market. This was on the 11th of June 2022. I'm going here to the laboratory. Here it is. Bulls must get off the fence now. 2.0 in favor of the bulls. We were at horizontal support. The highest score was actually 5 on relative performance, and we also had a retracement pattern. So on the 11th of June, we had horizontal support. So let us just zoom in a bit. Did that work out? 11th of June. So here is so here is the last candlestick before I made the video. We then go down 10%. In the crypto market, you very quickly get these big percentages. But from the point where I made the analysis, you do see that a low was forming. And from that point, we have a 9-10-ish% gain. So there was one other week, the week 13th of June, that pushed us a bit lower. But did this horizontal support work or not? I think it's pretty clear that there are other investors interpreting this as a horizontal support, and there is some momentum building here. What I don't like is that this purple 20-week moving average, we haven't been able to break out above it. I would definitively want to see that, and even this week we do see that we are below all the moving averages here, so we are still at horizontal support, but in a very weak way. On the dailies, you do see that the 100-day moving average, very clear resistance level, but as of late, you do see that the bulls are using it also as support. So there is definitely a battle around the 100-day moving average. As long as we are able to hold it, the horizontal level should be able to function. But losing the 100-day now, as it is smoothing out, it's gone from being negative, pointing downward, to smoothing out. We don't want to lose it. We really do not want to lose it, because if we were to see a break here and lose horizontal support, it would be really, really bad. That's not what we want. So would I consider this a winner or a loser? I think that this was definitively more of a winner than a loser for sure. But the bulls are still not in the clear. They have a lot to do. Well, it seems like one has fallen under the radar here on the 28th of May, 2022. Okay, so that one has to be reviewed. Okay. So let's actually look at one from the 28th of May. And that is Ripple / US dollar. Summer melt up or melt down, question mark. Minus 3.3 in favor of the bears. It was oversold. So one bull here on the technicals, but 7 bears here on seasonality. So the seasonality was atrocious. So let's find the 28th here of May. So the 28th of May, so let's go. So let's measure like that. So the 23rd of May was the last weekly candlestick. We then go up, we close up to 1.35-ish%. Maximum rally was 11%. I mean, you get these huge moves in the crypto market. The maximum gain for a bear would be minus 25%. But likewise, in this case, we did eventually form a horizontal low. But yeah, when it came to Ripple, did we see this very bad seasonality play itself out? Definitively. So the bears came back, but a low did eventually form, so that is pretty good for Ripple. So yeah, sometimes these will fall through cracks, but we were able to review the May thesis right now. Next on the list is Algorand / the US dollar. This was on the 26th of June. So where is the 26th of June? It is here. Breakout on volume. 0.3 in favor of the bulls. So very like tepid score. 20 daily moving average breakout on bullish volume. And the highest score was -4 here on seasonality, but we did have 3 bulls on technicals. And we had the double bottom, so that's interesting. So let's find there the 26th here of June. So here's the 20th, the 27th. So let's do it like this. So you initially go down, 13%. You then have a rally, 5.6. You then go down, very choppy. If we do draw in the double bottom, like that, so here and here, so the double bottom is still there. It's playing itself out a bit. What I really do not like is this sell-off here in mid-August, which did break us below the right end of the double bottom. It's not a disaster, but it's weaker than one would like to see. Let's go here to the daily data points. So on the 26th of June, you did have a 20 daily moving average breakout. Let's find here on the daily data points, the 26th of June, 24th, 25th. Yeah, so here's the 25th, here's the 26th. So you can see here that on these 2 days, the 24th and 25th, we had a breakout above the 20 daily moving average. But when the 26th closed, so I made the video before, the market closed, and we were still above the 20 daily moving average. But if we zoom in here, the problem is that we got below the 20 daily moving average in purple, 28th, and the 20 day has been a problem ever, all the way into mid-July here. On the 14th of July, we are able to break out above it. But, the 20 days is like a huge deal, and now we are really just battling it. So you can see here that the main moving average, I would say, at this point is this blue 100-day moving average. It's a huge deal and a very, very shortable here for the bears. So yeah, so what is my conclusion here? So the 20 daily moving average was like a key level identified, and it obviously is very important. We still have that long-term double bottom in play, but it's weaker because we haven't seen that follow-through rally. When you have a double bottom, you ideally want to see the rally just come relatively quickly. When it takes time, it basically means, and it's pretty clear, that while there are bulls able to protect us from a breakdown, there aren't enough bulls to trigger a rally, and that's you need that self-reinforcing rally for a real low to form. Just protecting us from cataclysm is not enough. So yeah, I am disturbed by what I see here with Algorand, but the bulls, they still have an opportunity, but the window of opportunity is definitively closing. Let's continue. So now we are in the sectors sheet. And the first item here on the list from June is this one. It's the premium yield REIT ETF. Huge yield and bull seasonality. In my notes, I wrote 100 weekly moving average support. The highest number was definitively seasonality. So very seasonality heavy score. So I published the video on the 11th of June. So let's measure what happened. This is the 6th, this is the 13th. So as you can see, we did go below, and we actually stayed below for 14 days. we didn't really break out and stay above until 35 days have passed. So let's do a bit of an autopsy. So 1, 2, and 3, and 4 times we were above that moving average and used it as support. When I did the analysis, we were on the way to travel back there. It obviously didn't work much as support. The bulls did fight valiantly to get us above it, but the bears are just smashing us below it again. So yeah, okay, so is the blue 100-week moving average important if you want to trade this ETF? Yes or no? Obviously, it is very important. In this case, the bears made a very strong move. Yeah, and while the bulls have been able to fight back, the bears are really just they are very aggressive because you can see here that the bulls, they sort of repaired the damage over like 49 days, 7 weeks. And then just in 3 weeks, the bears just eviscerate all the progress here from the bulls. So yes, there are bulls out there, but the bears are simply just way more ambitious. They can just eviscerate what the bulls have been doing. So this is this is not good. You don't want to see these kinds of tepid, knocks, from the bull side, and then the bears just, go full Mike Tyson and just knock them out. So that's not good. Next on the list is the aging population ETF, the moving average to watch on the 26th of June. I wrote here that the 50 daily moving average resistance plus more bull candles. So in this case, you had a 0.5, so very messy data. So you had the bullish seasonality, weak fundamentals, and relative performance. Okay, so let's find the 26th here of June. So 13th, 26th. Okay, so this was the last candlestick before I did the analysis on the weeklies. We go down a bit, but then we go higher, then we lose it all. So let's go to the daily data points like that. So let's find here the 26th of June. So yeah, here's the 23rd, 24th, 27th. So you can see here that this green 50 daily moving average, let me just draw it in, a very clear resistance level. So you can see that 3 days in a row, it's turned into resistance, and the bears were able to make some money. But what happened, so let me just also draw in some future times where it was resistance. But the bulls were able to turn it into support here, and you can see on this day here, mid-ish July, we did turn it into clear support. We then got a bit of a strong rally. So yeah, the green 50 daily moving average is a huge deal. It did obviously become resistance again. So you can see that on early July, the bulls were able to get us above it. But now we are below it again. So in this case, the bullish seasonality, it did play itself out. Then again, the 50 daily moving average as a resistance level has come back to be a resistance. So just messy. So the 0.5 really sort of became predictive because we have gone up, and then we have just gone down again. So messy, just very, very messy. But definitively going forward, when trading the aging population ETF, we certainly want to keep our eye on that 50 daily moving average. Next on the list, so July is a bit too recent. I think those were all from June. So now we get into the thematic sheet. First on the list here is Microsoft Corporation, a relatively known company, on the 26th of June. So I wrote big deal resistance level. So you had the 2.5 in favor of the bulls, but you had 50 daily moving average and RSI resistance. Technicals were primarily weak, given that resistance was the key indicator at the time, but seasonality and the other stuff was strong. So let's find here the 26th of June for Microsoft. So first we did the weekly data points. So here, this was the last candlestick from when I did the analysis. We first go down, up, down, up, down. Then we do have a breakout, but that is 35 days later. This blue 100-week moving average was just a major battle zone. So let's go here to the daily data points, like that. And let's find here the 26th. So here is the last candlestick when I did the analysis, the 50 daily moving average as resistance. The following day and the day after that, we were rejected there, and we did have 5% gain here for the bears, a potential 0.6-ish% rally, and then a maximum 8% gain here for the bears. So in this case, if we zoom in, did that green 50 daily moving average play out as resistance and was shortable? Yes, it was. The bulls were able to get above it for 4 days, but then the bears pushed us below it for 7-ish days. So obviously this is a very important moving average. You see that this major rally that came in late July and early August, it pushed us all the way up here to the red 200-day moving average, which was just beautifully as a short, worked as a short level, just very, very strongly. We also had that RSI resistance. So let's find here the 26th-ish of June. Where is it? It's around here. So you had that higher end of RSI that had become a problem. It did continue to be a problem, but you see here that during this momentum rally that we were able to get into new territories on RSI. Well, get back into territories we had been in the past, I guess. So in this case, okay, it's messy because yes, the 50 daily moving average worked well as a resistance. The bullish seasonality and other bullish data did play itself out temporarily, but that came later on. So it's a bit of a pattern, right? When you have a situation where the key indicator is, let's say it's bearish, but other data is overall bullish, then you can have this situation where all of the data play itself out, that yes, the resistance level does work as a resistance level, so you could short it. But you need in that case to short it with a tight stop, because due to the bullish seasonality, fundamentals, and relative performance, we did see later on that Microsoft had a substantial rally. So yeah, I mean, that's just the way the market sometimes is. There will occasionally be these conflicting data, and then you need to just take that into the trade itself. One way to modify the trade is to simply have a tighter stop. Next on the list here, we are sticking to June. So let's just scroll together like that. So when is the next item? This is September. September is way too recent. So there might be some scrolling happening here. So I do definitively have a bunch of stocks here on this list. And that makes it so much easier to have a neutral analysis. And if a thesis doesn't work out, and then I can just go to another thing, another security, and start from scratch. Well, it's very dangerous to trade like the same stocks time and time again, because it's very difficult to like reset your mind. So if you have a trade and let's say that it doesn't work out, and you go back to it to trade it again, your next trade will be colored by the previous trade, and you could get into those situations where you lose a bunch of money on like a single stock because your mind is just warped. And it could also be that the other participants in the market have a warped idea about the security, so all people are basically losing money. Bears and bulls alike, that can happen when you have those choppy and just wild securities. Okay, so here is the next on the list. On the 5th of June, Fathom. Bulls must clear these levels. So here is the 5th of June, minus 0.3 in favor of the bears, 20 weekly moving average, 100 daily moving average, and RSI resistance. So the technicals were rather bearish. Seasonality was slightly bearish. The most bullish thing was relative performance. So let's find the 5th of June. So the 5th of June, it is, okay, so the 30th, here is the next week. So in this case, resistance, boom, we go down, and as I said in the video, the purple 20-week moving average was a key resistance level. That did that play itself out? Was the 20-week moving average very, very, very shortable? Definitively. Definitively a very shortable moving average. Then we go to the daily data points, and we didn't have... Okay, so in this case, there's some noise here, so let's actually measure it, because you can see that here is the 6th of June, here is the 7th. So in this case, we did have a bit of a breakout, so it was... Yeah, so we had a 7.5% breakout. That is not... Like, most people who short a stock are not going to have, at least for their entire... Because you can divide up your short positions into different portions, like one long-term, medium, and short-term, and with different, like, stop levels. But like a 7.5 stop level for the entire position is just way too wide. So I'm pretty sure that there was some short squeezing here, in the sense that you had some shorts that were just stopped out. But the reason why we didn't see like a follow through here for the bulls is because that is primarily what happened. This wasn't like a rally triggered by real bulls. It was just, you had some real bulls, and then you had shorts that were just squeezed. But we didn't get a sustained squeeze, because the shorts came back again. And you can see, especially here on this day, you had a very beautiful short where at the close we were very clearly below it. On top of that, you can see that on the upper end of the wick of this candlestick, we were rejected at the 5-day moving average, which was support here. So that is like a very clear sign of weakness, and just a very good signal to go short. Back here, the 100-day moving average, you can see it's just a beautiful short level, and here is just surgical. It's a very nice, just very easy to build a short position. So you go short here, you have some profits. Then on this day, you see that at the close, we just go up there, and this position back here is not closed out, stopped out. And then you add to your shorts. And we just very, yeah. And in terms of RSI, let's just look at it a bit here. You see here that during this very strong rally, we did actually make a very high level on the RSI, but that is to be expected when you have these kinds of very tall candlesticks. But yeah, in this case, did this overall slightly bearish thesis work out? Yeah, definitively. This was a very good short. The bears used these levels very nicely. Oops, wrong color, disaster. Let's get the right color, like that. But yeah, the bears, they just came back with a vengeance. Even though the bulls, they did have one good attempt, but they didn't build on it. That's the thing. When you have a breakout, you need to really have follow through in order to really establish a new trend. Just having a temporary short squeeze just doesn't do the trick. Next, let's go down. Yeah, and next on the list is Herbalife Nutrition. Insiders are buying, and you had a rounding bottom. So where is Herbalife? It's here on the 18th of June. 3.0 for the bulls, horizontal support and the rounding bottom. Very good fundamentals and technicals. So horizontal support on the 18th of June. So let's find the 18th of June here. So here is the 13th, and here is the following week. Then we go down a maximum, let's measure, with the wicks it was maximum 17%, then we form a low and have a major 32-ish% rally, but then it is given back. So yeah, let's look at it in terms of the horizontal support. Yeah, let's go way back here. So you can see that, let me just draw it in. During this low here, we did actually go below a bunch of these horizontal support levels mentioned in the video. So that was a bit of an ugly break for sure. And I think that a key reason why the percentage pullback was that deep before we got a rally is because you had a bunch of bullish positions that were simply closed out, because a natural place to have your stop level is definitively at these horizontal support levels. If they were to break, it would be bad. In this case, we have seen a rally. In terms of that rounding bottom, let me just draw it in. we do have something that is a rounding bottom, but now it is potentially becoming a bit of a cup and handle. But the problem with that handle is that it's a bit too deep. It's almost as deep as the cup itself. So the bears are rather ferocious at this point. They are doing very much a lot of damage. So what happened down here, where we were pushed below these horizontal support levels, it's becoming a bit of an omen now. It is pretty clear that there's more the bulls that we saw here, they are sort of haunting us here. So there's something afoot here that's not good. So in terms of, I mean, it is true that not that long after I made the video, we did get a very significant rally, but the horizontal support was well, the rally came from horizontal support, but we had recently broken below it. So in this case, I will call this sort of like a loser, but it was not like completely incorrect loser. It was one of those. It was more of an issue with timing. Okay, but yeah, Herbalife, it is actually in trouble again, so it's messy, really. Next on the list is let's go down here. It's now in the other themes. So the first item here is actually from, yeah, so there's a bunch of interesting themes here. This is an interesting theme, that I call the famous investors. So you have, Buffett, you got ICANN, you got Kevin O'Leary, Rothschilds, the full gang. Yeah, let's continue here down the list. And we now have the, okay, so we really have to scroll a lot sometimes, but here we go, the Pfizer stock, pretty famous. Critical diagonal resistance. This was on the 5th of June. Minus 2.8 in favor of the bears, and we had diagonal resistance. Bearish numbers across the board here. So these are weekly data points, and I was bearish on the 5th of June. So where is the 5th of June? So here is the 30th of May. This is the following week. So we go up a bit, but then we do go down, minus 13%, back to where we started. Then we have a maximum 15% gain. So the diagonal resistance definitively played itself out. So was this a winner or a loser? I think we can call it a winner. Let's just also on the daily data points find here the 5th of June. So here's this. So here is the 3rd of June. And this is the initial rally. So you got a 2.5% rally. And then you got a 13% gain, maximum 15% gain. And you could also, so here is also a place where you could, add to, the short position based on the diagonal resistance level. So this is definitively one of the winners, like that. And next on the list is Ford Motor Company, like very famous stocks. When picking stocks to analyze, I will base it on the data. I could, of course, make a bunch of videos about, the most watched stocks, but that doesn't mean that there's opportunities in those stocks. So some of the stocks I analyze, like Sociedad Química, is definitively more esoteric, but the great thing about those kinds of stocks is that you can occasionally there's way less noise than you get in those super watched stocks. But here is Ford. I wrote super support and great fundamentals. Sounds bullish to me. 3.5 for the bulls, 200 weekly moving average support. And the biggest number here was on the technicals. And also you can see that the fundamentals were not too shabby at 5. So let's look at what happened. So this red indicator is the 200-week moving average that I talked about. Let's have a bit of a measurement. So Here's the 13th of June. This is the last candlestick when I did the analysis. And then you do see a 6.6% rally. Then we pull back a bit. We do actually dabble a bit below the 200-week moving average. But you see that that's the wick. The close was above the 200-week. Then we have a 44% rally max. Max gain is 44%. And the great thing about that rally is that we had clear resistance at this green 50-week moving average, which was a big deal back here as resistance as well. And it was also very important as support back here. So it definitely was a moving average to keep your eye on if you were still long. And you had 3 weeks here to really react to that moving average. So this was a big winner for sure. Let's just look here. Let's find, so here's the 16th, 17th. So the first trading day was the 21st, 7.77% rally. Then we pull back, and then we have that major gain of max 49%. That's very, very good. So was this a winner or a loser? I mean, making almost like 50 freaking percent on Ford. This is not like a penny stock. I mean, this is big boy stock. This is very good, very, very good. So very, very impressive move here from Ford. Yes, boom. Let's see. I'm not sure whether they're. Yeah, I think these were all the items for June. So definitely a bunch of interesting lessons here. I think that the method that I do use here for the laboratory, it seems to work. I'm continually, improving it, to increase the accuracy. And in order to be a part of that project and really see, what goes behind the scenes, then go to DiamondArm.com and get VIP access. And also join the newsletter, because when I reopen the VIP access, because I'm transferring all the content now from Teachable over to my own site, and it's a bit of an ordeal. It's a process. But anyway, when I reopen it, it's going to be really fantastic stuff. Definitively worth the investment. And the entire point of DiamondArm is to actually figure out, like, scientifically how the market actually works, and not simply just stocks. But you see here that I analyze everything, sectors, fixed income, forex, natural resources, fiat money, different types of cryptos. I mean, the whole full works. And when really figure out how the market works, that's going to be very good stuff. But it's definitively a process. It's a project. But I do also think that this video here and the other sort of like review videos I make, it shows you that there are ways to understand the market from a more scientific standpoint. So yeah, whatever you do, of course, let the trend be your friend, and yeah, get VIP access, join the newsletter, which is completely free, and on that newsletter is where I will also have the link to waiting lists for the VIP access.